and welcome to Nutmeg's Investor Update for June. I'm Lisa Kaplan, Head of Financial Advice at Nutmeg, and as usual, I'm joined by Shaun Port, our Chief Investment Officer. Hello, Shaun.
Hi, Lisa.
Shaun, it feels like May was a really busy month. We had political uncertainty in Italy and in Spain. We had Trump with his tariffs and also the ongoing uncertainty that Brexit is causing. What's been going on?
Well, yes, Lisa, you're right. There's been a lot of noise, particularly around politics in the last month. We're used to economic news and company news driving markets, but really it's been all about the politics. So let's start with Europe, and firstly with Italy. So it's taken the government nearly 3 months to form a coalition, and some quite unlikely coalition partners. The Five Star Movement, which is considered quite far left, have joined forces with the League, which is a considered far right group. And they've joined together to come and promote very populist policies around higher government spending and a flat rate of tax. Now, interesting, that's given the markets quite something to digest, particularly as their proposed finance minister was an anti-euro individual in Italy who was vetoed by the president of Italy. So it almost caused a constitutional crisis, and not surprisingly, markets have been reacting to both Italian bonds, but also generally European stocks. So since then, the government appointed a different finance minister, which has calmed the situation somewhat, but we still think Italy is quite a big risk for European markets through this year, particularly as they are going really headlong in a confrontation with the European Union. In Spain, Prime Minister Rajoy lost a no confidence vote and the government collapsed, leading a new Prime Minister to try and form a minority government. So again, political risk is very much back on the agenda in Europe.
And further afield?
Well, Trump and tariffs and his tweets about tariffs will continue to, I think, upset markets. So far, we've seen somewhat of a calming intentions, in part because China's been quite conciliatory in its language and its proposed measures to cut things like tariffs on car imports. So far, it hasn't really impacted the markets too much, but we think this is going to carry on through most of this year. What's been really interesting and significant, I think, in the past month is what's been going on in emerging markets. So in Turkey, President Erdogan has been trying to threaten the independence of the central bank. Not surprisingly, the lira has fallen quite sharply. In Argentina, continues with a currency crisis that we've seen through this year. And in Brazil, a very widespread strike by truckers has led to really quite an economic crisis in Brazil. The stock market fell by 10% in May and the currency by 6%. So a lot going on in emerging markets and something we're watching very closely.
And with all this going on, how have Nutmeg's fully managed portfolios been doing?
Well, Lisa, despite all the news on politics, actually we saw reasonable gains through equity markets and bond markets in May. So from our low-risk portfolios delivered a return around 0.4%, up to a return of 1.6% in our highest risk portfolios. Now, gains particularly came from US and UK equities, while we saw losses from Japan, Europe and emerging market stocks. So it showed that benefit of diversified portfolio across different regions in equity markets.
What changes have you made to the fully managed portfolios?
So we haven't really made many changes to portfolios through this year. In May, we made a small change in our equity position. So we sold our position in equities in Switzerland and bought UK equities. And now those markets tend to have similar characteristics. However, the UK has more exposure to commodity prices. And given that oil prices are quite strong and base metal prices are rising, we wanted a bit more exposure to the UK. So relatively small switch, but we wanted more exposure to commodity prices at the moment.
Thanks, Shaun. This month, our customer question comes from Phil Hadfield on Facebook, and he asks, what makes a great pension pot?
Well, Phil, that's a great question. I think one of the most important things is to start early. If you bear in mind that the longer you have your money in the market, the potential for greater returns, potential to benefit from compounding over a longer period. So start early. I think from a behavioural perspective, when you get a pay rise, hopefully if you get a pay rise, it's a really good idea to increase your pension contributions if you can, particularly as a percentage of your salary. The more you save, the better retirement income you're going to have. And actually, Lisa, I think you've got other things you would talk about. So what else would you say that people should do, like Phil?
Well, the two things that can make a pension really great, other than good investment, of course, are the tax relief that you get with a pension contribution really magnifies your contribution and saves you tax as well. And the other thing is your employer will often contribute, well, they have to contribute now to a pension for you and will match often your contribution and pay in more. So those are two other ways of sort of magnifying your pension contribution free to you.
Great. Thanks, Lisa.
Thank you, Shaun. And thanks, Phil, for your questions. And thanks to everyone for joining us. As always, if you've got any questions, please do get in touch via email, Twitter, Facebook, or via the comments below.